Okay, so the purpose of today's exercise is for us to look at our intercompany module as promised. So first of all, let me just go in and make sure that I am indeed sharing my screen. There we go. So you can see my screen in front of you. So we're just going to go into Sage 200. And you're going to see that I've actually got the little box that pops up to ask me to select company. So in this particular instance of Sage, I have a number of different companies already set up. For the purpose of the actual demonstration, we're going to use 3 companies, company A, company B, and company C. I have 2 other companies set up for company B with different base currencies. And it's a good thing to bear in mind that if you do have other companies, 1 or 2 or 6 or 12 or 25 different companies, and their base currencies are differing, then we can handle the exchange rate from one to the other. So we can show you an example of that if it's relevant. For the purpose of today, what we're going to do is we're going to go into company A, which is my UK operating company. And the purpose of the intercompany module is really so that we can actually stay in one company and transact across my other companies without having to move away. So the devil is always in the detail. So we're just going to go into the intercompany module, which will sit as part of your Sage menu. And we're going to go into the control accounts. The control accounts give you the opportunity to tell the system how you want to be able to communicate to the other companies in your group. In other words, I have my company A, which is the company that I'm in, and company B and company C and other companies, and I can determine which ones I actually want to be able to transact with. The reason why this screen is also important is because it will also tell you whether or not the other companies in your group have the same tax registration number as the company that you're transacting from, and that will determine whether or not we need to do a corresponding sales and purchase invoice from one company to another if they are differing tax registration numbers, or whether or not we can do a simple journal. So in the case of company B UK, you can see it's got a different tax registration number. Therefore, the system's automatically going to create the corresponding sales and purchase invoices, whereas company C has the same tax registration number as me, and therefore it's a simple journal from one to the other. We can also determine from here what the VAT rates are, whether or not they are VAT rated, and we can then go into each of these companies and we can set the defaults for the sales, purchase, nominal, stock, cash book modules. What that essentially means is that I can go into my sales ledger. So remember, this is company A talking to company B, and therefore you can set up a control account in company B to manage the transactions that are coming from company A. So we're going to be able to set those up from both a sales and purchase perspective. We can also go in and set the defaults for any journals, and we can also go in, set the internal area for any stock movements, and from a cash book perspective, the bank account details. So again, the devil is in those details. They are simply defaults, so it will give you an option to override these when we go in and actually do some transactions, and you're going to see me do that in just a second. This is how we're going to determine whether or not these other companies are VAT rated or not, and it will obviously bring forward the tax registration number and the base currency from the company detail that's held inside of Sage. So like I say, they are defaults. So let us go in and see what the intercompany module is designed to do. So the best way for me to be able to describe this to you, and you can see how the system works, is I'm going to go into the purchase ledger and into my supplier list. The scenario here is that we're going to look at putting on an invoice that's just arrived from a supplier, but we want to be able to share that cost with other companies in our group. If you didn't have the intercompany module, you'd be putting on £1,000 invoice in company A, and then you would have to go into company B and company C and attribute that cost to those other companies in whatever format, whether or not it's a sales invoice, purchase invoice transaction, or whether or not it is a simple journal. In here, I have a utility switched on to create an intercompany transaction. So it means that when I put in a reference number, I can go in and say, yep, it's £1,000 invoice that we are going to to pay to our supplier from our company, but part of that liability I want to share with other companies in my group. So I'm now going to say, yes, it's an intercompany transaction. The normal posting from the default supplier nominal code is where it's going to as far as this particular company is concerned. But because I'm saying it's an intercompany transaction, we're going to hit save to that, and then you'll see exactly what happens next. So we'll go in and say yes to all of these things. And as you can see, I've got two options then: split postings, sequential postings. The 99 times out of 100, 999 times out of 100, split postings is the way that we do it. We want to share other things with other companies in our group. Sequential postings will mean that the whole transaction goes in and out of company A, potentially to company B, then in and out of company B, and ends up in company C. Not many people do it that way. There are certain companies that do, just in terms of actually recognizing the liability across multiple companies, but that is an option. But this is the most regular, which is our split postings. And we're simply going to go in here and say £1,000 of that invoice is liable to company B. Not £1,000, a proportion of that £1,000 invoice is liable to company B, and that's going to be, let's say, £300. And we're going to do the same with company C. And remember, company B and company C have got different tax registration numbers. So we're going to say this one's £400, which essentially is going to leave me with £300 left in company A. So the resulting transactions will be £300 worth of cost liability in company A, £300 in company B, £400 in company C. So we're going to go next to that. And the system says, did you know there's £300 left from the transaction? Yes, we do. And then it's going to go and sort out all of the transactions that it needs to be able to do in order to recognize that transaction across the multiple companies that we're transacting with. So as you can see, I'm company A. So company A's transaction, £300 to company B, going to the default nominal code that we'd like it to go to. But again, now you're looking at company B's nominal, so I can go in here and I can change that. So this is their nominal structure in company B, all from this company. That's my default. Because this has a different tax registration number, we're going to get a purchase invoice in company B and a sales invoice in company A. We don't need to create either of those. The utility is going to do that for you. It's the biggest reason why it's of benefit. So we're just simply going to say next to that, and it will take the next transaction, which of course is for the company A to company C. And what we'll have in here is not a sales invoice and a purchase invoice, because it's the same tax registration number. It will simply say, yep, journal in company A, journal in company C. Again, taking the default nominal from the control account settings that you've managed earlier on. For us, we are indeed going to move on with that. I could go backwards, make any amendments or changes to it that I need to. But if we simply hit on the summary button, you'll see exactly what the system's going to create for you, which is essentially 4 transactions, and we are processing 1. But the 4 transactions in my processing company, which is company A, going to be a sales invoice to company B's control account. And we're also going to get a journal to intercompany C's control account from company A. In the receiving companies, we're going to get a purchase invoice in company B, and we're going to get a journal in company C. All for the valid reasons which we've mentioned earlier on, which is to do with the tax registration numbers and the way in which we handle that for you. Again, if that doesn't look the way that you would like it to look, we can go backwards and amend anything that we need to. But if that's the resulting transactions that we need, we're simply going to say post to that, and it will go ahead and do all of those 4 things that we wanted it to do. And there they are. And that's it. That's intercompany in a nutshell. What we're going to look at next is the way that you might do that when it's not necessarily related to an invoice that comes in, when it's simply a journal that you want to be able to move over. So again, inside of the intercompany module, which sits as part of this menu over here on the left-hand side. So we're just going to find the intercompany module, if we can, in my very extensive menu. And in here, you can actually go in and just simply say, I'd like to do an intercompany journal. This is very handy for those organisations which are apportioning salaries or utility bills across multiple organisations. In here, what you can also do is not to create a brand new journal, but you can also use a template. So my example today is for an electricity apportionment. So what we're actually seeing now, based on the template, which is actually a 70-30 split across the companies, is my ability to then be able to say, right, my electricity bill is £150. And we're simply going to say next to that. The warning that you're seeing on the screen is purely because I have not closed all of my periods or reopened all of my periods in all of the companies, just in my demo environment. So it's just warning me that the date selected for company 1, which is my operating company, is set into a closed or future period. So again, not necessarily something that you guys would ever do, but it is going to warn you of that. So I'm just going to say, yes, I do want to continue. And the end result is that it's going to take from the template the portions that I've actually said, which is, again, that 70-30 split, as I mentioned. So it's going to do exactly what we saw previously. My company B and my company C have differing tax registration numbers. Therefore, it can't just be a journal in company B. It has to have that corresponding purchase and sales invoice. And company C is going to be the journal. So again, we're just going to go through that process just so that you can see that it's going to do all of those transactions for us. Presents them onto the screen, which is exactly what we want to be able to see. And again, same principle applies. It knows exactly where we would like to actually post them to based on the defaults behind the system. But again, I can make amendments to that should I need to. And then we can go through to the next transaction. And again, this is just a nominal journal. The summary will, of course, take me through and give me the complete summary of everything that's going to happen. Again, exactly the same thing. One journal entered into one company creates multiple transactions across multiple companies. And as you can see, my journals are going to be posted accordingly. So should we go ahead and post that? Again, all of those transactions will take place. I kind of knew that that one was going to happen, so we're just going to ignore that. It's purely because I haven't got the project information at the bottom of the screen. So we'll go ahead and go backwards from there rather than going ahead and posting those. I'm just going to cancel that transaction, but that's exactly what's going to happen without projects switched on. But again, you just need to set some nominal defaults and project defaults if you do have projects switched on. The other things that you can also do, moving money from one company to another, so literally one bank account to another. So in the cash book transactions in intercompany, we can go in and we can do an account transfer. So we can move money from one bank account to another. So this is company A moving money from their main bank account to company B with a description of, I don't know, let's just call it intercompany movement. Again, the benefit of this is that I'm operating in one company and the corresponding transactions will sit across both. So we're going to choose company B's main bank account and we're going to move some money, maybe with a reference number. Payment value is going to be £1,500. It's going to come out of our bank account into company B's bank account, one transaction with a transfer date of today. Save that away and off we go. So literally the transfer has been done. So the two transactions that you would have had to have done manually, company A taking it out of your bank account, opening up company B and actually crediting company B, has been taken care of in one transaction. I'm just going to do that one more time, and I'm going to do it this time with an organisation, another of our companies, which is potentially a differing base currency, just so that you can actually see that the system is capable of handling that exchange rate. So this is company A to company B, which has a base currency of euros. As you can see, the balance is now displayed in euros in my company B and displayed in pounds in company A. It will also display for me the default exchange rate that you have set in your system, although I can override it at this point should I need to. But in simple terms, let's just call it a bank transfer. We're just going to go in and put a reference in here. Transfer date is today. And the payment value, if I say, let's say it's £900, you can see it's going to make the conversion for me based on the exchange rate. So again, whatever that ends up being. So the payment value out of my bank account, which is pounds, is 8,000. The receipt value is therefore going to be 8,888 euros. So more than capable of handling that type of transaction. Also within the cash book, we are able to, in my operating company, pay and receive transactions. And ultimately what you're doing here is you're saying, I've received some money into my bank account for a sales transaction. So we say, yep, I do indeed have some money in my main bank account and I have received that money, but it doesn't relate to a transaction that our company have done. Actually, what it relates to is sales in company B. Therefore, what I'm going to be able to do is receive the money into company A, but allocate it to transactions in other companies within our group, all within one section. Exactly the same principle. If we go back in and do exactly the same, this could be where I'm paying a supplier from my main bank account, which relates to transactions, one or many, in other companies. You are also able to use the intercompany utility in an almost back-to-back type environment. Ultimately, what this is going to give you is the ability for you to be able to sell goods within your intercompany companies. And many companies will move stock around via sales order and purchase order transactions. So it's kind of the SOP to POP to SOP example. We sell it to another company within our group and they sell it on to their customer. I can do that with another of our solutions called in the enhancement pack. So the enhancement pack has a back-to-back utility as well. Equally, we are also able, so let's just go in and actually show you a sales order transaction. So if it's an intercompany account that I'm trading with, it will automatically say, do you want to create an intercompany transaction for this? And the corresponding transactions will take place. If, however, you're selling to your customer, Better Kitchens in this scenario, but actually the stock is being supplied to you from another company within your group, what you essentially want to be able to do is sell the goods to your customer from your company, but automatically raise a purchase order for the other company within your group. If you also have back-to-back switched on, what the solution will do is create for you a sales order in the other company. So what we're going to end up with is 3 transactions. One sales order to sell some goods to Better Kitchens, which results in a purchase order to the other company within my group, my offshore company as an example. And in the offshore company, I'll also get the corresponding sales order. So in here, we're just going to have a quick look at the result of that. So I'm selling to these guys at Better Kitchens some of my Italian coffee makers, as you can see. What we end up with. So there are a number of different tabs which are sitting across the top of the screen for me here. And I'm just making sure actually that I do actually have an intercompany transaction on this particular one. I may have been testing. I might need to come out of this particular one just to have a look at something a little different. So let's just pop myself out of that sales order. Let's do a different one. This one for King Standing, just so that you can see that tab coming into play. So let's just have a little look. so that we can actually see. There we go. That's exactly what I'm expecting to see, which is this back-to-back intercompany transaction. So the idea behind this is that I'm selling these goods to King Standing Kitchens, but I'm purchasing them from another company in my group. So the result of that is that I end up with, in here, in company A, a sales order for the goods that we're going to sell to our customer. We also end up with a purchase order in company A, which is a purchase order raised on company B. And in company B, we get a sales order as well. So sales order number 61 in company B is automatically created off the back of this transaction, as is purchase order number 72 in relation to the back-to-back order for sales order number 88. So just to display that for you, we're just going to pop ourselves out of this screen. And we're just going to go into the other company. So I'm just going to change my company, and this time we're going to go into company B. And we're just going to look at the sales orders in company B. And you should see sales order number 61, which we didn't enter into company B. The system did that automatically for me. And it is for us to be able to supply to company A whatever stock item it is. And as you can see, the corresponding information in here tells me exactly what intercompany has done, but from a different view. So I'm now company B, understanding that I've got a sales order, but it originated from company A as a sales order to their customer, which resulted in a purchase order to company B, and in company B, we raise the sales order accordingly. In simple terms, that's exactly what intercompany is designed to do for you. There's a couple of other nice little utilities that you could have depending on the level of information and the functionality that you want to be able to achieve. If you want to move stock, not by selling it, simply by saying it no longer exists in my warehouse in company A and is now stock in company B, there is a utility for you to be able to do that too. So it's literally changing the stock valuation of company A in relation to the stock valuation of company B. Again, sits as part of the Sicon intercompany module, and we go into stock control and into the transfer of stock. We're doing exactly that. The only consideration here is that the item that you are essentially moving from stock in company A has to be, so this is going to go to company B, or I've just realised I'm actually in company B. I'm not in company A. So we're just going to go into company B and we're going to move it back to company A. But it has to have obviously got the same item code. So we're moving the same stock from one place to another. So depending on whether or not you've got stock of it, clearly in company B, I've got no stock of anything, a lot more stock in company A if I was doing it that way around. And it is literally that. We are literally removing it from stock in company B and adding it to stock in company A. No more complex than that. That's intercompany in a nutshell. If you need to see it in more detail, please do let us know. And myself and Nikki can help you out. Thanks very much for your time.